Morning, everybody. It's April the 1st. We're Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
No April
Happy
Fool's jokes?
Thursday stroke Friday. Happy long weekend.
Yes, indeed. It
Very
can come
exciting.
soon enough. Cool. So, what's going on? See some decent movement overnight. A few things alerting on my in my inbox throughout the evening. So there was clearly a
Yeah,
reasonable amount of action.
yeah. You got to sort of like work out how to switch off notifications in the evening, Joe.
Yeah, I do, definitely.
You can't be doing 18-hour days.
Oh no. Right. So, on to the news. So, first up, what I've seen on the headlines today, French President Emmanuel Macron announced a new 4-week lockdown in France, shutting down schools, businesses, as the country seeks to contain the third wave of COVID-19. So, obviously, that is not good news.
I think that was
Travels
an April
between.
Fool's joke, wasn't it?
I hope not. You never know, do you? On April the 1st, I could start
Yeah, no.
reading something out and being absolutely um, taken for a sucker. But this
Yeah,
doesn't look fake. It looks as though they are in a bit of a pickle at the minute in France, and I think that wave is spreading throughout other European countries. We was on the phone to a chap in Canada yesterday evening, and I know they're in another lockdown over there, struggling to get hold of vaccines. So looks as though we're looking pretty okay in the UK at the moment, but people are getting together now, so we still need to tread the line carefully. In terms of oil news, we've got an OPEC meeting today. OPEC and its allies, including Russia, are expected to keep output curbs in place for at least another month. There is still room for surprises, though. Two anonymous delegates told Bloomberg, including a possibility that a production hike will be considered. So we'll be keeping an eye on that throughout today. There was an error at a plant involving COVID-19 vaccines, which has affected 15 million doses worth of ingredients for Johnson & Johnson's vaccine. Again, that's not great news. And with regards to the Archegos capital management debacle, Deutsche Bank sold about $4 billion worth of assets or worth of holdings in a private deal last Friday. So it's helped them emerge unscathed from that scramble. But obviously, when you're selling $4 billion worth of assets, someone's buying $4 billion worth of assets. So somebody's copped a big blow there off the back of that, which isn't particularly nice. In the speech yesterday from Joe Biden, he proposed a $2 trillion package, including 174 billion set aside for electric vehicles. So that obviously boosted the likes of Tesla and other companies now that are now emerging and altering their strategies around electric vehicles. Did you see the thing about Volkswagen and the name change?
no.
Well,
That's
they
got to
said
be
it
an
was.
April Fool's
They
joke,
did say it
surely.
was an April Fool's joke eventually, but I don't think it went down very well because, well, first of all, they didn't do it on April the 1st. They did it a couple of days ago. And secondly, it did actually have an impact on the share price. They were talked about changing their name to Volkswagen, VOLTS, to match the fact that they were taking more of an electric approach going forward. But I don't think that went down very well.
Dear, oh dear.
Okay, so let's have a look at some charts then. I just had a look at the DAX a little while ago. That was flying up at new highs and looking very strong indeed.
Yep.
You need to share your screen, Steve.
Oh,
In fact,
so
what I'll
let me
do is
share.
I'll jump straight into currencies first up, and you can have a look
Okay.
at the other bits in a moment. So again, currency indices to start with. The blue line at the top is the US dollar, and that continues to be trending higher and looking pretty strong. We have seen a bit of a dip down over the last 24 hours or so, and that's encouraged some of these other currencies to tick higher. So in yellow we have sterling, and in orange we have the Canadian dollar. Down here we still have these currencies that continue to underperform. None more so than the New Zealand dollar over the last 10 days, or over the last month or so. And that's really had a bit of a corrective move to the downside. If we take a look at some of the currencies on an individual basis, then first up, we're looking at dollar index. As we've talked about, it's been moving quite nicely higher. Although we did see some indecision yesterday with the posting of this doji candle. We did post new highs, but then closed around flat on the session. And we're actually backing that up with further decline today. So maybe a little bit of profit taking or a little bit of cooling of the momentum in the dollar index in the short term. But overall, I think I'm still quite bullish on that and expect prices to move higher towards this 94.00 level. If we take a look at euro dollar, then obviously the inverse often of the dollar index, we've seen this continuation lower, some stalling around about this 38.2%, which is kind of the first downside target that we had on our charts. So a little bit of buying support has emerged here, not too much to speak of on the volume front. So we'll wait and see whether or not there is any potential for this to hold, or whether it's just a temporary move higher before a continuation to the downside. If we look at Aussie dollar, that was quite interesting yesterday. Continued weakness. We've got this head and shoulders top pattern that I've been speaking about, and this break of the trend channel. We broke below the neckline here, which is on the 23rd of March, and we have continued lower, certainly off the worst levels of today, but we were down as low as 75.30 on that earlier. So I think we can see more continuation lower in that, and for me it's a case of selling into rallies for now. Looking at euro sterling, that's now convincingly broke below this 78.6% support level, which had been in place since around about the 24th of February. So a lot of price action sort of stalling around here, but it has finally given way, and we are now heading lower. So in terms of the next downside target, we can look at the 88.6, which is down at 84.20, and then below that we're targeting these swing lows that we posted last February down at 82.82. So not looking great on that front at the moment for the euro versus sterling. If we look at cable, on a comparative basis against the US dollar, we've seen this break of trend channel, and we've seen a retest of the underside of this trend channel, and it's just sort of hanging in around here at the moment. So trying to make its mind up whether or not it's going to continue higher, and maybe what we've got here is some sort of flag or triangle pattern that's forming. So if we break up from that, then you would expect a continuation higher. If obviously we break to the downside of this, then we would expect a deeper correction on that one. So just watching on that for now. If we look at some of the other US dollar currencies, we've got dollar Swiss, which is showing no signs of slowing down, and that's fast approaching this 50% fib level at 94.97. And then finally, if we look at US dollar Japanese yen, we've talked about this big break of trend, which is fairly important on the long-term scheme of things. If we go back to this level here in 2015, we can see a decent break of this trend channel, and it is continuing to move to the upside. Maybe what we saw here in the consolidation was a sort of attempt at forming a flag, so there is potential for even more upside on that, I think. In terms of the short-term targets, I'm looking for these highs here to be targeted. First one comes in at 111.71 and then 112.22. So a case of buying dips on dollar yen for now for me. That rounds up really all I wanted to speak about on that front. Cool. So Steve, I'll chuck it over to you and you can give us your thoughts.
Cool, thanks for that. Yeah, FTSE we'll look at first. Obviously, sort of like FTSE is boosted by the dollar, the strength of the dollar at the moment, but we're still sitting below 68.12, and that for me that's the sort of line in the sand, and we need to sort of punch through there before we get any sort of like retest of the 69.60. I think a break of 68.12 will lead to a fast move higher. Stops will be triggered, and we should see it sort of like looking buoyant. At the moment it's forming again a bit of a triangle formation. On the DAX, as Joe said, it's punched through the 15,000 level quite aggressively now. We're buying a break in that this morning, and we're going with the flow above 15,080, and so that looks pretty cool. You can see on the hourly chart the how aggressive it's been through there. One-way traffic, so very positive for the German 30. The CAC is sitting just below its can't remember if this is all-time highs or not. It's not. No, it's not far away from all-time highs. All-time highs come in at 61.23. 61.00 is the recent potential double top. Obviously has to break this neckline. Doesn't look like it's going to do that at the moment. Looks like we're going to have a full-on assault on that, probably dragged up again by the US indices this afternoon, but looking quite positive. But obviously getting the lockdown in France, that'll have a negative impact, so maybe it could hold
it's
around
completely
that
shrugging
level.
that off, isn't it?
Yeah, it is. You know, obviously we've got the other indices sort of punching through. Obviously FTSE's a bit of a different beast, but yeah, from the going across the pond, the US, again, we're hanging around the all-time highs in the Dow. Just come off the, let's get the exact level on this chart. 33,257. We're trading a couple of 100 points lower than that, which is just a snip in Dow terms. Obviously, on the 4-hour chart, this shows how aggressive the move higher has been, and plenty of potential for, I mean, this rising wedge, plenty of potential for a correction lower, but I'm not going to try and preempt that by picking a level to get short at up here. Just got to stay with the flow if you're long of these indices. Nasdaq's a bit of a different story. Under a bit of pressure on the tech sector, obviously. Recently we had our big aggressive move higher, and it's stalled over, well, since mid-Feb actually, but again we're looking at 13,291, so not far away, about 50 points away. A break above there and we should see maybe the bull trend continuing, and looking at it from a an impulsive move. This is just a minor correction. Then this swing back to 12,100 or 12,200 is just a minor correction in an extension higher. S&P's very close to the 4,000 psychological level. The way the DAX dealt with the 15,000 psychological level, I can see again the same sort of thing happening here. 4,000 will be like a little bit of a wafer that it punches through this afternoon. That's what it feels like. It's building up towards that. On the commodity front, as Joe mentioned, oil, we've got this bullish channel. We've broken back below it, but again, is it forming a flag formation? Potentially, yes. So really looking at what OPEC plus nations decide to do. Are they going to go for a further cut? Possibly. That would lead to a higher price action, most definitely, and probably a revisit back towards the $68 level or close to that on the WTI crude oil. On the Brent crude, we've got slightly different levels. We're looking at this long-term downward trending resistance line, which we've broken on the WTI crude, but haven't quite made it on the Brent crude. The level here now is around about $79 for that, so still $6 to the upside potentially on that. We've got the impulsive move here, got the first wave up, the correction lower, wave 2. This is wave 3, and potentially a 5th and final wave before we get a decent correction in Brent crude. So worth looking at. On the gold, obviously dollar strength has led to this impacting on gold prices. We're trading around about 17.19 as we speak, which is a bit of a correction higher from the swing low which we saw. So we're potentially forming a double bottom here. We need to see a break of the 1756 level to confirm that, and prices to close above there. Obviously we'll have this previous swing low which will now act as resistance at 1765 as well. So there'll be a couple of sort of punchy resistance levels up here, but that we'd only consider that, or that would only be a potential if we get a reversal in this dollar index, which doesn't look likely at the moment. 93.13 trading. It's always nice to see that. So yeah, that's pretty much wraps up gold as well. Gold and oil covered, and the indices. So feels like it's in for a bit of a volatile day, although the VIX index is languishing near ridiculous lows around about 15, which would normally years ago would be quite an extreme high, but nowadays it's not. So
can you get a chart up there, see what it's looking like?
Yeah, I think I have one on the indices. No, I haven't. I've got it on. I haven't got one. Here we go. It's
It's
sort of
bumping around
like,
the bottom, isn't it?
yeah. I mean, like we say, like years ago, this would, the 18 level would be considered a sort of decent bit of volatility. In percentage terms, it doesn't feel like it anymore. We've got this. Well, I mean, I'd still sort of consider this normal levels, really.
Yeah.
Normal levels of volatility now, the new norm, whatever it
Close
is.
the gap.
But look, yeah, starting to pick up maybe a bit of bearish momentum coming away, but yeah, I don't know what the catalyst would be to punch this through it. I'm sure it'll be good news of some sort.
So, yeah, I mean, I don't know what it'll be. I mean, it's obviously the end of the quarter yesterday, and going into a long weekend in Europe, so I can't imagine there'll be a whole lot going on today. I know there's obviously a reasonable bit of data out, and tomorrow we still have non-farm payrolls despite Europe being largely closed. So maybe it'll be next week when something occurs, or maybe we'll just see a continuation. Maybe the market's just so full up of stimulus that it's just going to keep going.
Yeah, yeah. I mean, they'll come across at some point. We're in a big bubble, and that will burst at some point. But
A big old hedge fund going pop is normally not good news. There's some serious dents in the balance sheets of some of these big banks, and that's not impacted. We've seen a
no,
container ship wedge itself in the Suez Canal, which is responsible for 12% of global trade. That's not done anything. We've seen doses of vaccines not work and stopped being used. That's not changed anything. We've seen lockdowns come and go. It's going to have to be something pretty horrible to take the market down by the looks of things.
yeah, maybe some sort of like really weird April Fool's joke might cause it.
Yeah, like Volkswagen, something like that. Okay, so on to the head trades from yesterday. Not pleasant, unfortunately. We had our two trades and we were stopped out both of them. So what did we have? We had a DAX short, which was highly speculative against the trend, as all these trades are, of course. But that didn't work out. And Steve, you were short in Bitcoin again. Clearly some rampant bulls that are supporting that, and that didn't work out either. So what we got today, is there anything you fancy?
I like the look of the Aussie dollar that you came up with, so probably going to steal that from you.
Well, I'm going to keep the Aussie theme as well, but I'm going to look at Aussie CAD because CAD's been pretty strong, really. It's sort of not mirroring the dollar, but it's sort of holding up there with the dollar on a on an overview basis. But this is Aussie CAD trading in a bearish channel on the hourly chart. Pretty neat and tidy, really. Broke to new lows yesterday, and this morning looks like we're having a retest of that. So for me, on a technical perspective, that would represent a reasonable opportunity to sell into strength. So I'm going to try that now. It's at 95.20. Let's give ourselves 25 tick stop, quite tight, 95.45, and let's look for a continuation lower. Let's go 94.50, so 2.82R on that one today. Could be impacted by the OPEC meetings as well. Obviously, strong correlation between the Canadian dollar and oil, yeah, we'll see how that goes. What you got, Steve?
Right. I'm looking at the Aussie dollar. I think I like this head and shoulders formation and the rejection of the neckline again. So I'm going to go aggressively short of this with a pretty tight stop. What's the high of the day at the moment? The high of the day is 76.00. Getting short here at 75.69. Sorry, what is the current price? 75.70. Yeah, 75.70. I could have the stop at 76.00 and go for a humdinger of one, a 5-to-1 risk reward, looking for 150 points on the downside. 74.20. That's what I like the look of. Very, very tight stop at the highs. Big round numbers, 76.00.
Okay, fantastic. So we've got two Aussie shorts then. We've got an Aussie CAD and an Aussie dollar. Good luck if you're following those. In terms of data out today, we've got initial jobless claims at 130, claims expected to fall to 625,000 from a month previous. At 3 p.m, we've got US ISM manufacturing index expected to rise to 61.2 from 60.8. Now that wraps it up for us for the week, and we're not going to be back until Tuesday now because it's the Easter break in Europe. There is non-farm payrolls tomorrow, so expect that to be quite interesting, especially as volumes are expected to be quite low, I would have thought. So please take care if you're trading. And we can wrap it up there, Steve, and come back next Tuesday, hopefully nicely refreshed with some winners to talk about from the Gun to the Head Challenge.
Lovely. Look forward to it. Have a nice weekend, everyone.
Cool. Great. All right, mate.
Cheers.
Take care. Bye-bye.